Hi everyone, this is Rob Rain. Welcome to the LA Wave Options U.S. Market Update. Well, since our last recording, Bitcoin has been consolidating, just as we discussed. Interest rates continue to consolidate, and the market is yet to break out. Markets are closed on Monday for a holiday, which means the way things look now, Tuesday could be one heck of an interesting day. Let's take a look at the charts. At the time of this recording, it is 11:30 on Sunday evening, and the futures market is open, up 3 points, even though, as I mentioned in the intro, the market is closed tomorrow in observance of Memorial Day. So taking a look at the charts, in the last recording, we talked about how we were consolidating in this bit of a symmetrical triangle. Wasn't the most well-formed triangle, and the market did move, but not in a qualified breakout. So basically what we have now is the market has morphed, if you will, into an ascending triangle, and this triangle actually looks more well-formed than that symmetrical triangle. The market continues to struggle at that 420 level that we talked about for months and months. All you have to do is go back and look at the previous recordings to see. We still have this last bastion here for the upside of the 426 level of this extended C wave in the zigzag that was within the C wave of the zigzag that was within the wave 5. So you can see we got an awful lot of extended levels here in the market. So we could go up to 426. If we get to 426, I think the market is really ready to rest. It may happen on Tuesday with everything else that's consolidating going on. Let me show you what I mean. Taking a look at the dollar, so I've talked about in numerous recordings, these fib levels. Well, it's amazing how the lines actually usually get touched. You can see that we talked about this move in the 61.8% extended C wave here, and we actually touched that line on the 25th, and then the dollar rebounded back to the upside. So there we got our official touching of that extended level. Now the key here is the dollar has moved back above 90, which is a key area of support resistance. If the dollar stays strong, I think that looks good economically, or interest rates are about to go up, or a combination of both. But could be that it's a good sign for the economy moving forward. May not be such a good sign for the stock market, because again, all the countries around the world are in a race to get their currencies down because of international trade, exchange rates, etc. So a stronger dollar, although it might be good economically, may not necessarily be so good for the stock market. So where could the dollar go? Well, the next stop should be, if we continue higher, a retracement of the C wave. So we should head back up towards this area here where the B is, and that's not too far away from kind of a next area of resistance as well. Now, we've gone back up and tested this 38.2% level. So when you have an extended move in a zigzag pattern, or in a wave 5 pattern for that matter, but I focus mostly on the zigzags, once you hit one level, normally you retrace back to the previous fib level before extending down to an extended C wave level. So with a roughly 38% B wave correction, 61.8% is what we'd be looking for on the extended level, so 100% would be a further extension, which means usually you get that test of the previous fib level. So my point is that although we're back above 90, possibility still exists for the dollar to weaken and move lower. So it's just difficult to make a call right now, considering the fact that the zigzag pattern has done what it was supposed to do. It's supposed to get a 61.8% extension. That's right where we are. Kind of need the dollar to let us know where it's going to go next. Also in the intro, I mentioned that interest rates were still consolidating. Virtually nothing's happened since the last recording. We're still going dead sideways. So are we going to start to break higher or fall back to the downside? About the only thing we can say is that we're kind of breaking below, at least on the 10-year, that higher level of consolidation that I mentioned in the previous recording. If we look at the 30-year, same type of a scenario here. We've dropped below that higher level of consolidation, but in both cases, with the 10 and the 30, this lower level of consolidation is still holding. So you can look at that on the 10-year. Also thought we would take a quick look at the DMI on those as well. As you can see here, the ADX is diving down on the 10-year, again, confirming basically that we are consolidating sideways. 10 years getting ready to move one direction or the other, and then with the 30-year, we're starting to get this bubbling up of the ADX. I use this analogy a lot of a volcano. When you look at the volcano, you see the big mountain, but nothing's there. You just see a mountain. But before a volcano is going to erupt, what we don't see is the lava bubbling underneath, getting ready for the big explosion. I've noticed that type of a pattern a lot where you have consolidation in the actual chart pattern, but the ADX actually starts to turn and make a move to the upside, indicating that there's strength building before the actual breakout occurs. It still isn't telling us which direction we're going to break out with interest rates, but if the dollar strengthens, if interest rates go to the upside, both of those could be catalysts for a downward move in the market. Looking at Bitcoin, where we're currently trading, we were up a bit yesterday, down a bit in today's trade. Remember, this is an end of day chart, so that was Friday's close, and we're not too far from that. So we closed basically at that same spot yesterday, and right now at the time of this recording, we're at about 34, so we'd be somewhere right in here. So you can see Bitcoin is consolidating after hitting the 161.8% extension. I mentioned that I would be just cautious here and passive and let Bitcoin tell us where it wants to go. It's already moved to its extended level at 161.8, and so that's really what's playing out, which is classic Elliott wave price action. Is it consolidates and then tells us where's the next impulse move going to be. So we look here. Is it trying to sneak out of this triangle? I don't know if that's enough to call a breakout even with where we're trading today, but we certainly have to pay attention to this move to the downside. Now the market pundits are trying to create this scenario, this synergy, if you will, between Bitcoin and the market as a precursor of risk on, risk off, and saying that, well, if Bitcoin breaks to the downside, the market's likely to follow because that means risk off. Bitcoin moves up, that's risk on, the market's going to go to the upside. I don't know that I really buy that analogy so much yet. You can see that Bitcoin's already had a significant correction. The market hasn't yet. So is this telling us that the market's going to correct? I think the market may correct, but I don't know that Bitcoin is such a leading indicator. I think Bitcoin and all the cryptocurrencies are kind of their own thing. I don't know that they're really tied so much to the stock market or gold either, which a lot of people try to make those analogies and scenarios as well. Speaking of gold, let's take a look at it. In the last recording, I said gold had moved to the upside, but for how much longer? For our alert service, we actually took our long position off on gold. Gold has been consolidating sideways here. If you look at the Elliott wave pattern, we still aren't quite disqualified on this wave 5 to the downside pattern here, but we're getting pretty close, which means there is likelihood we could move higher. But for me personally, I would need to see gold break above 180. When you look at the DMI, you can see, it still looks pretty good, but that ADX is approaching 40, which normally tells you the strongest part of the move is over. The positive directional indicators come down a bit. I don't see the momentum to break through 180, but if it does, then you follow the charts. We're technical traders. Market doesn't care what I think. Market doesn't care what anybody thinks. It's going to do what it's going to do. And so at Elliott Wave Options, that's what we do. We trade the charts. I'm interested in your opinion. We don't talk about gold a lot. Leave a comment. What do you think is going to happen with gold? Do we break through this level? Is gold off and running? Or is this the end of the move and we're starting to get ready to turn back? Also wanted to show you, here's something that if the market does break to the upside, and I'll change my entire thesis. We've been talking about the storm clouds, and you've seen our recordings where we're listing all these things that are to be concerned about. Keep in the back of your mind and maybe be a little bit cautious about going too hard to the long side at this point in time. But if the market does break to the upside, you can see there's a little bit of building strength here in the IWC, which is the ETF for microcaps. So that's certainly something that would be bullish for the market. If it were to break above, we got some resistance here, number of flats listed through here. But if we break above 150 and hold it, broke above it here, you can see on Thursday, came down and tested it on Friday. We look at the 10-day moving average, a little separation there. So Friday's move was warranted as it was just slightly in an overbought condition and certainly not the type of scenario you want for a break to a new high. And then we take a look at the DMI, and it's not set up. It's not confirming an upward move yet either, and we don't have that lava bubbling scenario, the analogy that I used, yet either. But it's just something to keep an eye on in case the market does break back to the upside. Last but not least, as we always do, take a look at the VIX. You can see the VIX is way down. We had talked about this level of support here, which was a really strong area of support. We broke below that. Now we're back down in that area where we were back in the beginning of April. And the last time we got here, we took off from a volatility standpoint and mentioned in the previous recording, could we break up and maybe not make another new high with the VIX, but maybe have a little bit of a spike higher? Well, you can see we had a doji on Friday. So there's just so many things with the consolidations all across the market that certainly looks like the market is getting ready to make a significant move. So fasten your seatbelts. Let's see which way it goes, and I'll be back to report it to you. If you like this video, please hit the like button, or better yet, hit subscribe, and you'll be notified immediately when one of these videos is posted. Enjoy the rest of your holiday weekend. Be back to talk to you again soon. Take care, everybody. If you like these recordings, I'd like to invite you to join our new Trade Finder Live, where each and every week we do a live webinar where we talk about the market, but we also go a little more in depth into the technical analysis system that we utilize to forecast where the market's likely going to go, and also to identify trading opportunities. Get your free subscription today. Take care, everybody.